Hello, traders. It's Thursday, January 26th. I am so sorry I haven't been able to get more videos out. I have been burning the midnight oil trying to get my trend lines to market. They are incredible. They're going to change the way that we trade. At very least, they're another variable for us to search for. You're going to see some incredible breakouts. So I'll show you what to look for in these trend lines, and then we'll also take a look at some breakouts, and we're going to find some new trades. Let's start with the last pick, NUE. I posted this video about 10 days ago. This red bar you have to disregard because the NYSE had a problem 3 days ago on the open. There were a lot of stocks that had misprints. Brokerage firms have not removed those bars yet. The NYSE is still trying to decide how they are going to settle those trades. So if you look at this bar, most of it is non-existent because the stock opened pretty much where it closed. In any event, NUE, the stock right about here, you can see how it's been able to move higher. It had earnings today. It kind of sat quietly and waited for that earnings announcement. I do like this breakout right in here. I expect it to continue higher, especially after a good earnings announcement. These are what we call high plus trend lines, and you can see how the stock is above that. I believe if the NYSE maintains the data points from 2 days ago, I am going to disregard it for trend lines because they're fictitious. The trades never happened. The prices were erroneous. I hope that this data gets scrubbed so I won't start any trend lines on that date, and I will draw through those points as if they weren't even there. So that's how I'm going to address it for trend lines, but we'll see how they decide to handle that situation. In any event, we've got a nice breakout here. This is a high minus trend line. If the trend line is connecting highs and it has a negative slope, we refer to that as a high minus. If the trend line is connecting highs and it has a positive slope, we call that a high plus. Ascending trend line, descending trend line. So really easy. It'll be much easier for me to refer to them in this fashion. So yes, we've got a nice breakout. NUE, very nice trade. You can see what the S&P 500 is doing here on the right part of the screen. I always want to know what the market is doing because that drives all of our decision making. Right now, we're filling the gap. This is a very important point, as you're going to see in just a minute. So let's see how much of this gap we fill. 1OP is getting ready for a cross in here. These are some pretty steady red candles, but you can see they're starting to decrease. So that is a sign they're decreasing in size, a little bit of a compression. So there is some buying coming in here. So let's take a look at the other stock that I posted, TSM. This was about 8 days ago or so. And you can see it was a post earnings play right in here. Beautiful follow through. Again, please disregard that bar. Never happened. But look at the progress. This has been an excellent pick. In fact, a lot of semiconductor stocks right now look good. Tech in general is starting to look good. When I run all of my searches, I'm starting to see many more attractive bullish candidates than I am bearish candidates. And that to me is a fundamental sign that the tide is changing. So let's take a look at the market and see what's going on. This is a big tell from yesterday. Now, mind you, we are heading into earnings season. The market is 100% about earnings and interest rates. So we are in the middle of earnings season. We had Tesla yesterday. The reaction was favorable. Microsoft initially, unfavorable reaction to the earnings, but it's starting to find its footing and move higher. We've got Amazon, Apple, Meta, Google, all reporting earnings next week. That is going to be a huge week for earnings. We also have the FOMC statement on Wednesday. So when you talk about earnings and interest rates drive the market, next week is the creme de la creme. This is when we're going to get a ton of information. Right now I'm watching this bullish hammer right in here, almost fill the gap, finding a little bit of support at the high of the day from yesterday. Got 1OP, kind of a bullish cross in here. When we see a gap up and an instant reversal into the gap where we make a new low of the day, we have to be very, very cautious. What would bulls ideally like to see a gap up look like? Well, they would want to see a gap up where this opening price is actually the low of the day. And then the market marches, 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 marches higher, and you have a gap and go formation. What you have to be very careful of is when that opening gap fails immediately. In the first 3 bars, in the first half hour even, you want to see that opening gap hold, or it tells you that there's a lot of fluff in that opening move higher, and that sellers, wham, 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 are fairly aggressive. They feel very comfortable selling at that price point. And so they are testing that bid and driving it down, getting a couple of tails under body here, along with this bullish 1OP cross pending. Let's talk a little bit about 1OP. Not going to get into great detail on it. When we have these big troughs and we have a cross, that is a bullish sign. Yesterday we had a gap down, a big gap down after Microsoft earnings and after that negative reaction. So initially we get that gap and go follow through that I was just talking about. However, in this instance, you can see how we found some support early, didn't really move lower, and then blam, this long red candle right here took out the 200-day moving average. All right, looks like we're going to get that gap and go formation here. Get another nice red bar, and then instantly, and I mean instantly, green bar, green bar. These two green bars are very important because they tell us that before the selling pressure could really start to gain momentum, right away, boom, we see buyers come in. That tells you that there's two-sided price action and that we should not expect a big drop in the market, because if sellers were the aggressors and buyers were very passive, here's what you would have seen. Long red candle, maybe a pause or two with a doji, long red candle, long red candle, long red candle. That would be a sign that sellers are fully in control and that you're going to get a bearish trend day. But instead, okay, yeah, we bounced a little bit off the low. There's a red candle right here. Well, you'd want to see another red candle and another red candle and take out that low very soon. But that's not what happened. You start to see mixed overlapping candles. After you have about an hour's worth of price data, you're realizing that, hey, you know what? Every single one of these candles, look at the retracement here, retraced all that red candle right in there. Here, we retraced it immediately. Lots of retracement tells you that there's two-sided price action and that this move lower is finding support. Now you have a bullish 1OP cross. See you later. Here you get a little bit of a bearish 1OP cross. That tells you this is a nice move. We went right into the gap. We got right above the 200-day moving average. So if we're looking for a gap fill, which now looks pretty likely because we're already making a new high of the day and we're filling in some of this gap, then what I want to do as a buyer is let's let this bearish 1OP cycle run. Let's see how much damage is done to these gains right in here and how much retracement we have. Ideally, if we want to trade from the long side, we don't want to see much of any retracement, and we want to see the open of this long green candle preserved. That's exactly what happened. Bullish cross in here. See you later. So right now, we had this blue dotted line. This is part of the indicator, still falling, even though we had a bullish cross in here. We want to see this blue dotted line flatten out, which it has right now. Now, when we get that bullish cross in 1OP, that's when we want to be looking to enter. Let's zoom out. I've gone right into analyzing an M5 chart. We need to know what the heck is going on a longer term basis. you can see that there's a trend line that comes into play here. So let's zoom out very quickly and let's see where that trend line starts. Whoa, that is a major trend line that started back in January a year ago. Touch point or very, very close. I believe it touches really close to a touch. Got a touch here. Many touches. This is your trend line. We also have a trend line connecting the lows. So this is a wedge formation. In between here, you got the 50-day, the 200-day, the 100-day. We're moving back and forth across those moving averages at will. So they mean very little unless you're day trading. Then you want to know those price points because they do come into play and you can expect to see some stickiness there and you can see some movement through it and you can get behind that momentum. But from a swing standpoint, from a longer term standpoint, the moving averages right here, right now mean nothing. This wedge means everything. The temptation would be to say, hey, look at this. We're testing it with greater frequency. This is a long-term trend. This is bullish. We are going to break out to the long side. GDP came in better than expected today. The chances for a soft landing have improved. Everybody, hey, this is going to be fantastic. This is going to be a great move higher. So let's not wait for it. Let's buy right now. Let's be early. Well, this wedge could just as easily poke right through. We've got mega cap tech earnings coming up next week, as I just mentioned. Typically, into those numbers, shorts are passive because they've had their head handed to them in the last 10 years. Those stocks have been super, super strong with huge upside surprises. So, as a longer term short seller, you would hold off until you get those earnings releases out of the way. Once they're done, then you can be more aggressive. And that also coincides with an FOMC meeting next week. So we have to be very careful rushing to judgment that everything's going to be great, that we're going to get the breakout, and now all is right in the world again. Inflation's coming in, blah, blah, blah. You can get a real nice breakout here. Oh man, does it look good. And as soon as bullish speculators climb aboard and start getting long here, blam, and we fall through the upward sloping low plus trend line, flush them out, and then go lower. That's a pretty classic formation, and that's exactly what happened right on this long red bar here. We opened above this trend line. At the time, it was drawn in tighter to this point right here and this point right here. We opened above it. Everybody got all hot and bothered. We reversed sharply, gap reversal, and then what happened? We fell through all the major moving averages and we fell through an upward sloping D1 trend line right in there. So need to be very careful rushing to judgment that this is bullish and that we're going to get that bullish breakout next week. I will say that when the dust settles after next Wednesday, so a week from now, Thursday morning, we're looking at the market and the market is through this downward sloping trend line. I get bullish. So let's see if that happens. I'm going to give you some bullish trades right now. Let's take another look at what the market's doing, see if it's able to find some support. It's going to be filling this gap in right here. We're going to zoom in so that we can keep an eye on it while I'm looking at other charts. You can see we still have some work to do. Some tails under body in here. Probably going to test the high from yesterday, which is fairly close to the close from yesterday. So yesterday we get this gap down. We find support. We filled the gap. That is a gap reversal. That's pretty impressive stuff. Buyers are engaged ahead of mega cap tech earnings. So let's go through some of the searches. I'm going to show you my trend lines. Right now, everything is being coded. So I suspect that we're going to be able to have these in the next week or so. Knock on wood. I'm also going to be adding some searches. As soon as they're available, I'm going to use it. I'm going to do some videos. I'm going to show you some stocks that are really lining up. Let's do that right now. I'm able to see what you will be able to see in a week or so. If we just go through and take a look at TSM, I can show you a few breakouts. There you've got an upward sloping H plus breakout above the 200 day. That's really nice. We've got a downward sloping high minus. That was a nice breakout right in there. You can see this is a low plus breakdown. Gorgeous stuff. Low minus, breakdown, low minus, breakdown. Now we have support right down in here. So in the future, maybe these lines get breached. Not going to happen anytime soon. We would need to have another big drop in the stock, and then these longer term lines might come into play. Just like these longer term trend lines are coming into play as well. And when we have these downward sloping trend lines, the instinct is to always look at them as, oh, we're going to break out. Oh, we're going to break out. This is fantastic. Well, these trend lines are critical price levels. They represent resistance in this case, and perhaps that resistance holds. We need to be prepared for that because it's more likely to hold. So you come in here and you start seeing a breakout. Well, you need to have that follow through. You've got to close above it and have follow through. If not, and you come down and see us bumping up against it, there's a good chance that you're going to see a retracement in price. And just like here, if you start coming into a low, like a 60-day low, and you breach below that trend line, and then you poke right back up above it in the next 3, 4, 5 days, that is a bullish sign. That is a sign that that trend line is valid. That trend line is going to hold. Get ready for a nice bounce. So that's kind of how trend lines work. Let's take a look at some stocks. I'm going to be focusing on the long side. I love what I see right here. Okay. I don't like the fact that we instantly got into the gap, and these are some long red candles, but I do like the fact that we're finding support. These are tails under body. We had a nice gap reversal yesterday, fairly bullish yesterday. I don't know if we're going to fill any more of this gap in right here. We've got a nice bullish 10P cross here. We can set an alert line right above these tops in here. And so I'm just going to use a end of day, so good for today, trend line, and I'll just click on that high right there. If we break out above it, we'll get an alert. We'll also be watching it. I would start buying in here personally. So I like it. I think the market after this reversal yesterday, buyers have proven themselves. They want to test that downward sloping trend line. Let's see what happens. Let's look at some stocks that are coming up. Lots of searches I can use. And again, we are going to be searching for breakouts. So if I see, not if I see, if the computer sees that we have a high minus trend line breach right here, we will be able to search for it next week. Super exciting. As you look through these charts, I want to encourage you to take a look at where some of these breakouts and breakdowns are happening. Tiny little line in here, but gorgeous stuff. All right, there we go. Yes, I would be long SPY here. So let me do that. 40.48. I am long. So let's see what the market's doing a while from now, and we'll see if that trade panned out or not. All right, so let's continue to take a look at some picks, and we're going to just click through some charts. I've got a number of them that I can look at. Tesla's rebounding nicely. That one is so deep in the hole. What does that mean, Pete? Deep in the hole? I've never heard anything like that. It means that this drop is not going to have many trend lines that come into play in terms of bullish trend lines because it's hiding behind all of these highs. So the only trend line you could possibly draw would be a steep, almost 90-degree angle like that. Most trend lines, you want to have them with a nice longer term gradual slope. Those are going to be your more reliable trend lines. So anything you could possibly draw is going to be way down in here. But that's not to say that we are not going to catch some of these moves. because we are. Look at how these longer term trend lines that come way, way back are actually in play here. And we're starting to find support. So we break below this trend line, but now we close above it. Well, that's a sign that the support level is going to hold and we can play a bounce there. You can see these nice breakdowns right in here on Tesla. There is a little breakdown right in there. Got to be a little bit nimble on this one because you can see, yes, we got some nice follow through, but then as soon as that open from that red candle is breached, you've got to get out. You're probably going to be taking a small loss on that one because it happened quickly, but you're out. You wait to reload, and that breakdown is where you're going to make back any little tiny loss that you had there and then some. These are nice breakdowns, but you can see, again, multiple support from different points telling us this is a pretty big support level. So if you come down and you mamby-pamby start poking at this, it's probably going to hold. When you attack a trend line, you want to attack it with long red candles on the way down or long green candles on the way up. Those are the ones that are going to be breached. So again, you don't want to come down and poke, 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 bullish hammer, bullish hammer, bullish hammer. That's a sign you're going to reverse. You also want to be very careful when you have a 60-day range. Let's say this is the 60-day range, which it actually might be December to May. Yeah, this is a 60-day range. So when you're down here and you're looking for breakdowns and you have multiple trend lines coming in and seeing signs of support down here, your first assumption should be this is support. We are going to bounce off of that support. I am going to look for opportunities to catch a bounce off of that support. I am not going to be looking for a breakdown unless I see long red candle, long red candle on heavy volume, and we destroy, we obliterate that support level. If I see that, okay, cool, game on. I mean, then we're going to get short. Then we will short. Then we will short. Otherwise, hey, this is probably going to turn out to be a nice little bounce. Downward sloping trend line. There's a high minus. Yeah. Got a little bit of a high plus right in here. Yeah. All right. So now the market rallies up. We're starting to see a little bit of resistance here at the upper end of the range. You get a nice breakdown. All right. Yes, we will take that for sure. And again, we're starting to see some resistance up here. Our longer term trend lines are coming into play. We are not going to assume that the stock is going to blow through these. And in fact, what we're going to do is we're going to be looking at these and assuming that resistance is intact. So that's how we're going to trade trend lines. We're going to be able to see these support and resistance lines. We're going to be able to see these breakouts and these breakdowns. And that's kind of the mindset that you have to have going into them. CVX, let's take a look. Now I'm just going to start flipping some charts. There's a nice breakout right there. You can see that's where the stock is. This is a high plus. This is a high minus. Get a little bit of a breakout here. Starting to get kind of toward the upper end of a trading range, so you'd have to be a little bit more careful here. Here you've got a trading range. The stock is in the middle of the range, which incidentally, trendline breaches in the middle of the range, middle of the 60-day range, tend to be quite good because you've got nice room on both sides. So here you got an upward sloping high plus, beautiful movement to the upside. Can we use these trendline breaches for swing trading? You bet. They're fantastic for day trading because when we get these breaches, you're going to get follow through at least for a day or two. Many of them will turn into great longer term swing trades. Perhaps I'll cover some of that in future videos, but for day trading, these are going to be the cat's meow. I promise you that. Here's a nice low plus breakdown. All right, we come through this right here. with a big drop and follow through, and we've got plenty of room down to this low because there's your range. So when we're in the middle, you're going to tend to see some more reliable moves. Now, when you have a longer term upward sloping trend line like this, and let's say that this is a 60-day support level right in here, which it might be. No, actually it's not. But when you take out these upward sloping trend lines with these long red candles like this, it tells you that this prior support level is going to fail, and now you're going to have a new trading range to consider. So let's go through and take a look at a few more stocks. CVX looks pretty good, but I think we can find better. So I like the fact that it's been able to break out here. This is another trend line that can be drawn in here visually. Okay, it probably is going to continue to go. Right now, I do want to show you one other chart because QQQ is ready to make a pretty major breakout. This is a very long-term downward sloping trend line, just like we saw on SPY. It's also bumping up against that 200-day moving average. Tech stocks have a long road to recovery. They've got a lot of room to run. The SPY has been above the 200-day moving average often in the last couple of months. QQQ, not since a year ago. So it's trying to get through this for the first time, and I'm starting to see some really nice tech stock setups. So this is an important price level, very, very important. So I'm going to personally set a GTC alert right here. This is well above that 200-day moving average. If we get through this point, that's going to be a big deal, especially next week. I'm going to be all over it anyway, so I'll know when it happens, but that's how you would set alerts on critical price points that you're watching. Downward sloping trend line, really nice breakout to the upside through the 200-day moving average. I want to find something that's a little bit closer. Got a nice little high plus right in here. So now you've got buy signal, both confirming the direction. Good stuff. You can see some of these breakdowns in here. Now you come down in here and you get this breakdown right here. Okay, there's some money to be made in here. And this is probably about 4 days worth of negative price action, but now you're starting to see some bullish hammers. You're starting to see that, oh, we weren't quite able to take out that low. Oh, we weren't quite able to take out that low. Now you see congested price action that suggests that a support level is forming. When you have that support level forming at a new low like this, that's when you want to be watching for those trend lines because you're going to get a nice bounce in there. Similarly, resistance, resistance, lower high, got your low plus trend line. See you later. These are all automatically drawn and generated. CRM has got a nice little breakout in here, but you can see there's a lot of stuff happening and the stock price is really, really choppy. Not my favorite type, and that's going to generate more trend lines. I'm going to keep looking. When it gets super busy like that, yeah, that means that there's an awful lot of chop going on. Here we're starting to get near the upper end of the range. This is PDD, so nice little breakout in here. Small pullbacks. Yeah, this one probably could go. I mean, this is a fairly bullish chart. And you can see that there's not a lot of resistance coming into play here. We don't have a whole lot of downward sloping high minus trend lines coming in to define that. So yeah, this is pretty nice. Pulls back, rally, pulls back, rally. This is a nice breakout. PDD actually looks pretty dang good. So maybe could be my pick of the day. I always prefer to buy strength. That stock has been strong for a long time. You can see lots of downward sloping trend lines coming into play in here. The stock has pretty major resistance to get through. Fairly choppy, but starting to bottom a little bit. NVIDIA. So when it comes to tech, we've already seen that the 200-day moving average has been preserved on the QQQ. Incidentally, market looking pretty good in here, making money on our position. got a downward sloping trend line right here. This is a high minus, really nice breakout. Hover over the E. Earnings on February 22nd. Yes, I like it. I think Nvidia is good. And that still gives you at least 3 options expirations to sell some out of the money bullish put spreads on this stock. I like doing that. Make sure that they expire before the earnings announcement date. Repeat, make sure that your bullish put spreads expire before the earnings announcement date. We do not hold bullish put spreads over earnings announcements. Plus, you're going to realize much less decay in those option premiums, meaning the spread will not widen out, meaning you can't make as much money because the implied volatilities are going to be retained ahead of that earnings announcement. So we want them to expire before the earnings announcement because we have no intention of holding that spread over an earnings announcement. And I would leverage this downward sloping trend line and this breach approximately the 180 price level. So selling the 180, 175 bullish put spread for $1 makes sense to me. I like the market. I like the fact that this stock has been strong relative to the tech sector. See if we can find a few more. I'm going to just keep clicking through. Again, this is just bad data from the NYSE GAF. But if there were a breakdown, you can see we're kind of loaded and ready for that to happen. Here we've got a nice little horizontal breakout to the upside on XOM. CVX, I believe, announced a big stock buyback today. So energy in general has been pretty hot sector. Got almost a nice breakout right in here. But again, we're bottoming and we're choppy. So this is a process. We're not seeing long green candle, long green candle, long green candle. This is still not strong relative to the market, and that is what we want. Continue to go down. I'm going to run a couple of other searches. LVS, this is nice. So there you've got your resistance level, and we've got a couple of upward sloping trend lines that are breached to the upside. Yes, we would have caught that breakout. And that could currently be where PDD is. Right now, that could be one of my favorites. Although it has run a lot, it tells you that buyers are lined up on this stock. So we're getting an awful lot of tech stocks in here right now. These have been, look at all these trend lines tell us that there is major horizontal horizontal resistance as well as resistance from earlier, and this stock has been absolutely pummeled. I'm not going to go back and look at it. It's Roku. Bring up a chart, you'll see it has been trashed. So I'm really looking for something that's had nice strength. Yesterday in the chat room, a lot of members trading COF, and that was a downward sloping trend line here. Nice follow through, another fairly choppy stock. You don't see a lot of movement in financial stocks. They tend not to make big moves. Oracle, pretty nice. You can see upward sloping trend line broken here. We've got our high minus breakout right here. That's pretty nice. Yeah, Oracle's got a pretty good head of steam. So let's go into a couple of other searches. I'm going to look for some longer term. I'm just going to scan through here and I'm going to look. Let's do WDC. That's a nice breakout right in there. Up on that 200-day moving average. Needs to get through that for me to be interested in it. This is Qualcomm. Nice downward sloping trend line, broken to the upside. Now it's through the 200-day moving average. Qualcomm actually looks pretty decent. Airbnb, trying, but it's got that 200-day moving average right here. When I'm looking for stocks, I want what we call blue sky. I want all resistance levels removed. All of them. Nothing but blue sky ahead. Well, we got the 200-day moving average right here. So there's a good chance that that is going to provide some resistance. Otherwise, this is kind of nice. We're getting a decent little breakout here. You can see Caught some of these breakdowns in here. Now we've got a support level right there, just below that previous support. So yeah, this is looking like a longer term support level, horizontal support level, and there's our downward sloping longer term trend line. This could be a really nice breakout. Starbucks grinding higher, that looks pretty good. A lot of resistance up in here, so we'd have to tread very cautiously with that. And let's go into, and by the way, when you're viewing charts, you're not going to see all these lines. I mean, if you wanted to, you can see where the historical lines came into play, but I'm only going to be showing the current lines that are active, meaning they have not been breached. And I'm going to be showing you the ones that have recently been breached in the last 10 days. So you won't have to worry about all this congestion and all these spider webs. You're going to have a nice, clean chart to look at. And I also plan on allowing users to define what types of trend lines they even want to see. So you'll be able to choose the length of the trend line, the duration of it. You'll be able to choose the angle of the trend line. You'll be able to select which stocks have multiple signals, breaches in the same direction recently. So you could be looking at a stock and maybe the last 3 signals that have been generated have all been on the long side. Great. That tells me that this stock is breaking multiple trend lines on the upside. Why has so many damn trend lines anyway, Pete? Can't you just draw one trend line like that and be done with it? Sure. But as traders, we need constant reminders that this stock is strong or weak. And that's what these trend lines are going to do for us. So right here, it might be in focus. Okay, I move on to the next stock and I forget about it. Oh, here's another reminder that this is a good one. In here, hey, this is a good short. Well, if that were the only signal that you got, it's gone and forgotten. Well, starts coming up on another search, another search, another search, another search. There's still plenty of downside in that. So these are constant reminders. That's why I've chosen the model that I have. And we focus a lot on day trading and very short-term swing trading. So these constant reminders are good for us. And when we have these breaches, you get a breach like that on an upward sloping trend line right here, and you come in and you see it on the search, and then you start watching the price action during the day. Now, I know I can get behind this move all freaking day, and I don't have to worry about this day and this day and this day. And oh, look, it bounced. See, that was not such a good one. Yeah, it was, because that's what we're really interested in, and that is a huge move. And on almost all of these, you're going to see that type of follow through once it gets through that line. Well, hello, I sure want to take advantage of that. And in many instances, you're going to also see that follow through. So I'll be doing more articles on the types of moves that we're looking for and which trend lines seem to set up best for us so that when you're flipping charts, you'll instantly know how you should be approaching that trade. Take a look at Disney and a couple of other non-tech names. Disney looks really good to me. This nice downward sloping trend line breach to the upside through the 200-day moving average. Really good stuff. And I think I might be ending, and I'm going to have to find a really nice chart that I like. And I'm kind of leaning towards PDD like I was earlier. I like this breakout right in here. The stock has been compressing. It's through. Doesn't really have the volume that I would like to see, though. I'd like to see this happening on big volume, like right in here. That was earnings related, so see if I can find one or two more in here. I do like that Tesla, but there are no trend lines coming into play, so I'm not going to use that. CVX is nice. XOM getting through a new high as well. Those are going to be relatively safe plays. AMD. AMD is nice. AMD is a choppy stock, and you can see that in the chart right here. Upward sloping trend line here to the 200-day. Just not enough room for me, but I think it is going to get to that 200-day. Man, I'd love to find a really decent one for you here. I'm going to continue to look until I find something I really like. And this has potential. Yeah, I think I'm going to go with Adobe. It looks good enough for me. Yeah, I like it a lot actually. So we've got a nice upward sloping trend line here. That is a low plus. That'll lend support. We have multiple resistance lines coming in here. And you can see how the stock has been able to find support here and not pull back. And now we've got a few of these upward sloping trend lines that are breached to the upside. And we have the 200-day moving average that the stock is able to breach as well. And you can see how yesterday, all things considered with a 45-point drop in the S&P 500 on the open yesterday, it held up pretty dang well. You can also see how we're getting increasing volume in here. That's also pretty nice. So we've got multiple breakout there. We've got these breakouts here. We're above the 200-day moving average. We have decent volume coming in. Adobe. I like it. There are many others that I could pick. I'm going to throw a caveat out there for you as well. The caveat is that we want the market to be above that downward sloping D1 trend line to take a position in Adobe. We also want to see it closing above that 200-day moving average. Both pieces need to be in place. If they are, we're going to have some nice upward momentum. And right now, the high from today is what we need to get through, because then we will have for sure cleared this longer term downward sloping trend line that dates all the way back to January. So we'll have the market tailwind in our favor. The market will have been able to overcome any little weakness that we saw early in the day today, and it will make a new high of the day. That would be good. And Adobe will be through that downward sloping resistance already, and that 200-day moving average that's coming into play. Blue skies ahead. That's how we trade. Thanks so much for watching, everybody. I know it's been a long video. I haven't been able to get them out because all I've been doing is working on these trend lines. So also look for many future videos featuring these trend lines over the course of the next week, 2 weeks. When they're out, I'm going to start posting a bunch of videos. And let's take a look at the market right now. Gosh, we're pretty close to where we entered the trade. I've got a couple of points profit in it. So that's how we're going to conclude. I will see you soon. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.